Right, morning all. It's Friday, the 5th of November. Happy Fireworks Day. It's 10 to 11 in the UK. Big day for non-farm payroll. Big day for the US then. We already know that inflation is a major focus, and this will sort of give us an idea of which way the economy is going as well. I'm showing you a chart of the US dollar index here. You will remember that 94.5 was strong resistance in October. We backed away significantly from there. But last week, as you can see in the weekly chart, we got a bullish engulfing candle indicating the market was going to bounce back, and it has continued higher. We are now, well, this week we opened just above the 100-week moving average. This is my blue line here. Dipped down, recovered. So the October high, last month's high, was 94.56. So if we can close the week above 94.56, that has got to be a positive for the dollar. What I really would like to see is a break above 94.80, which is a 200-week moving average, and then I would feel pretty confident that the dollar's going to fly. Next target would be this little spike low down here, which would be 95.70, but 50% fib would be a reasonable first target, which is around 96.00, 96.10. So we could really have a good run up if we beat 95.56, as I said, tonight, and maybe 95.80 early next week. Okay, moving on. That strength in the US dollar has been helpful to us insofar as we had a strong resistance level at 116.10.20 yesterday. The exact high was 116.15, so bang in the middle of that range. And of course, the market's now come off significantly. Oh, it did yesterday, actually, down to the previous low from the October low. The question now, I think we actually really need to look at this on a weekly chart. The question now is, do we get a double bottom and does the market then bounce, or do we break and see a significant move to the downside for the euro versus the dollar? Again, probably going to be very dependent on the US non-farm payroll number, which I believe is out at 1:30 today. Let me see now. Let's put that up there. So we've got the 50% fib around 114.90, which is just a little bit below the October low. Break below 114.90. Well, a break below the October low, really, which is 115.23. That would certainly be a break below 115.10 would be negative for today. Break below 114.90 would be even more negative. You can see that this spike high up there is at 114.94. So that kind of reinforces that 50% fib support level, and break below there, yeah, it would pretty much be goodbye euro. And by that time, the dollar index would certainly have broken up through those resistance levels, which would also further confirm likely strength of the dollar and therefore weakness for the euro. Let's go back to the daily chart. Just let me have a quick look at the moving averages. Yeah, we're trading well below the moving averages on the daily chart, of course. So this is another negative for the euro. New Zealand dollar also breaking down. We have a bit of a trend line down here around 70.65. So that will be key over the non-farm payroll number. See if we bounce off there. Obviously, that depends on whether we get a weak employment number, which would maybe send the dollar down. So it's a slightly tricky one, because if you have a weak unemployment number, a weak employment number, in other words, if unemployment is higher than expected, that's obviously a drag on the economy, and it indicates weakness. And that might encourage the Fed to hold off a little bit on tapering or interest rate rises, which would then be weak for the dollar. And of course, obviously, if we get a strong employment number, in other words, if unemployment goes down significantly, well, there'll be even more concerns about inflation, I would have thought. Average earnings will also be important today, because we do have that wage pressure issue, shortage of labour, etc. So if we get strong average earnings, I would have thought that would also be an inflation worry. Then we'll be talking about more interest rate rises, more tapering, and perhaps that will be positive for the dollar. The dollar now hitting my next target. We're down through the 100-day moving average, hitting the 50% fib, or very close to it, which is around 73.65, where I think 73.69 is the low so far today. Is that correct? No, I've got 68. Anyway, as you can see, we're hitting that 50% fib and the 50-day moving average. I personally would not be buying there. I don't think that's a good enough support level. Obviously, again, dependent on that number, which comes out in about 2.5 hours. But right now, I wouldn't be too keen on getting into a long position. Just had a thought. The Americans, I'm pretty sure, put their clocks back a week after us, and therefore I would imagine that the non-farm payroll number must be out at 12:30 today. Let me just check that. Yeah. US non-farm payroll out 12:30. Average hourly earnings, we're looking for plus 0.4. Previous was plus 0.6. So and participate. Oh, well, anyway, well, those numbers. So those numbers are out in an hour and a half. Now, oil. Oil was a tricky one yesterday. I was going to use a word that I probably shouldn't have used there, but anyway, difficult. We broke below the neckline, head and shoulders, and then rocketed. So completely fooled me. Have to admit, not the first time the markets have fooled me. Won't be the last. And then by the end of the day, the market had collapsed below the neckline, back below the moving averages. And back below the 23.6% fib, which we're holding below now. So to me, this looks pretty negative for oil in the short term, at least. I do believe that there's a head and shoulders pattern that has completed. We even got an extra shoulder, if you like. And we have broken all important support levels. So I think we're going to 7700, 7650. That is my target, which is a good 250 to 300 ticks lower. It'll be interesting if I'm right about that. I hope we don't do another one of those big spike ups today and frustrate the situation. You never know, but that is my view right now, that the risks are to the downside and we are going down another 250 to 300 ticks. We'll see if that plays out. I don't think the non-farm payroll number will have too much of an influence on that today. It would have to be so far out of line for it to affect energy prices. Okay, good luck. I advise not having positions over the non-farm payroll number because that really is just a gamble. I have no idea what will come out, and even if I did, sometimes the market does strange things, unpredictable. Even if you did know what the number was, with so many different numbers out, employment change, unemployment rate, non-farm payroll, the average hourly earnings, participation rate, blah, blah, blah. You never quite know which number might be way out of line and which number might affect the market more than the other ones. So yeah, if you've got a position over that number, it's always a gamble when you run positions over big things like FOMC minutes and interest rate decisions and big numbers like this. Anyway, that's it. End of the week. Good luck. It's been a difficult week, I will admit, for those reasons actually, because we've had FOMC minutes and the Bank of England fooled everybody yesterday. The market leading up in day or two before non-farm payroll is always slightly odd because volume dries up a little bit. So it's been a difficult week. I think more orders have been stopped than normal, but of course the stops are always tight, 20-25 pips, and then the potential profit on the winners is usually pretty good, and we certainly have had some big winners this week. So hopefully, if you've been putting any trades on, you are up money, although I will admit it's been a tricky one, and on oil certainly was horrible yesterday. Gold has been a nightmare. Don't understand what is going on with gold. I'm not even going to bother to show you the chart. Okay, I've waffled on enough. Good luck today. Have a great weekend, and we'll catch up with each other again Sunday night when I post the reports and Monday when I do a video.